stocks perk up with advances outstripping declines despite slowing GDP growth. Adani Group stocks, they are in focus. They rise in trade today. We have metals and realty that rally. Energy and FMCG bring some sort of rare.
Axis Bank acquires Citi's consumer business in India for 11,600 crores with effect from 1st March. The move will bring 3 million Citi customers into the Axis fold.
Bajaj Auto reports a steep fall in exports in the February month, while tractor maker Escorts reports a strong growth of over 27% in sales, says demand momentum to remain strong across geographies.
Chinese factory output rises to its highest that we've seen since April 2012, with manufacturing PMI reading of 52.6 compared to 50.1 in January. Metal stocks jump on the growth surprise.
Oil and gas majors have hiked prices, which is led by 20% in the commercial segment and less than near 5% for the 14.2 kg cylinder. The move draws public criticism.
Hello and welcome. You're watching us here on Halftime Report. I'm Mangala Malu, with me Ekta as well as Sonal. Looking extremely good for the market. What a fabulous first half it has been for the bulls. After 8 days of decline on the index, the last 8 days of February, the first day of March, we start extremely well. The mid-cap index is outperforming the frontline indices as it did yesterday as well. But for the Nifty, it's up 125 points. The Nifty Bank up 400 points. And from the lows on Monday itself, the Nifty Bank has rallied almost 1,000 odd points. So a big move is what we're seeing in all of these indices as well as individual stocks. The market breadth firmly in favor of advances, with 2,500 stocks advancing for about 500 stocks which are declining.
Hi Mangalam, hi Sonal. Yes, absolutely. You know, that was what I was tracking as well. The kind of resilience that we've seen, at least for the financials in the past couple of trading sessions. For the Nifty, definitely we've clawed back above the 200-day moving average. Remember that we had hit levels of around 17,300 odd in yesterday's trade. So there has been some amount of semblance of recovery which has taken place for the Nifty. The Nifty Bank is what is standing out to me. Let's see whether this kind of momentum sustains or not. Remember that we had slipped below 40,000 just in the past couple of trading sessions, and now we've clawed back. So it is a gain of around 1.3% on a week-to-date basis, or rather 1.8% on a week-to-date basis. So let's see whether that sustains or not. Lot of stocks in focus as well. We will be discussing that. Another key indicator of the kind of momentum that we're seeing in our markets is, one, the India VIX is down, and two, Adani stocks are higher. So it seems as though there's some amount of risk appetite which is coming back into our markets.
Oh, yes, they are. And look at the way Adani Group stocks have seen the moves today, right? So all of them up anywhere between 5 to 11%. A couple of these stocks in the broader markets also doing well. Rain Industries up 8.5%. Reported numbers day before yesterday. And since then, it has seen one-way rally. So that stock should be on your radar. We also have Macrotech Developers. Remember, in Monday's trading session, it was down 10%. And in last two trading sessions, it has made up for those losses as well. So a couple of these names on our radar as well. One more of it is Deepak Nitrite. It is in focus because there is a fresh anti-dumping duty that US has levied on sodium nitrite. Now remember, this is one of the major products for Deepak Nitrite. It's their flagship product where they have around 75% domestic market share. They export some of it as well to the US, and there is where some of the dampener that has come in for the company. Now US has imposed anti-dumping duty on sodium nitrite imports from India. The period is not known. However, the weighted average dumping duty margin is at 44.82%. This is for Deepak Nitrite. So that's the kind of hit that they will have to take in terms of higher duties that they'll have to pay on exports. Similar duty has come in for other exporters as well in the country. Now, provisional duty was already in place. This is from 17th August 2022 till 12th Feb 2023. At that point in time, it was at 58.13%. The petitioner for this is a sodium nitrite manufacturer back in the US. Chemtrade Chemicals.
So I think there is some mild bit of an issue with your mic. So we'll just try and fix that in just a bit. But meanwhile, you know, I was looking at a couple of data points coming in from the F&O space in the market itself. If you just take a look at three main indices, we have the Nifty Bank, as well as the Nifty IT Index. Both of them doing extremely well as we speak. Up until, you know, the last few trading sessions, it was Nifty Bank which was doing the heavy lifting. The IT index had taken a bit of a back foot, and now as we speak, The IT index too has come back with a gain of almost 1% and supporting the frontline index at the high point of trade. But a lot of other individual stocks in focus as well as the first of the month. Sonia joins in with what she has on M&M. Sonia.
Well, thanks a lot for that. On M&M now, CLSA has upgraded the stock to a buy from an outperform. And they've raised the target price as well on M&M from 1583 to 1619. Now, that's an aggressive target price. It's well above the current market price. And the reasons are the same. There's a very strong growth seen in the farm as well as the auto business. In fact, in the auto business, CLSA is projecting a 20% growth in the SUV segment in FY24 itself in terms of volume growth, that is. They're looking at a very strong order book that the company is currently sitting on. They have an order pipeline of 266,000 units, and because the demand is so strong, the company is going ahead and raising its capacity as well. Remember, there are 6 new electric SUVs that are expected to be launched over the next 5 years, and hence M&M is looking to raise their capacity to 49,000 units per month to service the rising demand. So the auto piece is firing very well. In the tractor segment, there are, of course, some concerns about a weak monsoon situation because of the El Nino, but it's not showing in the numbers just yet. The prognosis from CLSA is that tractor volumes will rise 13.5% year-on-year in FY23 because of a strong winter crop production as well as prices. So, aggressive target price coming in from CLSA, upgrade on the stock, and they say both the segments are firing very well.
Okay, all right, Sonia, thanks very much for that. So M&M doing well, up around 1.8%. Just watch out for Cipla because it's just at the cusp of breaking 900 as we speak. It's at a 52-week low at this point in time. Remember, it's lost over 16% in terms of its market capitalization on a year-to-date basis. Last year was a great year for Cipla. Now it seems to be coming undone simply because of those observations which it has received for the indoor unit. We did have a Kotak note also indicating that one cannot rule out any kind of escalation. So that is a fear in the markets, and that's playing out on the stock as well. Need to take a short break. We'll be connecting with the management of Garden Reach Shipbuilders on the other side. Stay tuned. Welcome back. Well, it is turning out to be a day which is quite steady, you'd have to say, for the market. So the Nifty is holding on to 17,400 as we speak. We have the mid-cap index, which is up over 300 odd points. So let's see whether this kind of momentum sustains or not. But let's talk about a company now. Defense PSU, Garden Reach Shipbuilders and Engineers, is in focus. The stock is up nearly 90% in the last 1 year. Earlier this year, the company did sign a pact with Rolls-Royce Solutions to manufacture marine diesel engines. To discuss this and the benefits from the ongoing fleet expansion in defense, we are joined by retired Commodore P.R. Hari, the chairman and the MD of Garden Reach Shipbuilders. Thanks, sir, for joining in. Well, if you could just start by talking about your tie-up with Rolls-Royce, which you did sign earlier this year. Has it started taking off, and what would it mean in terms of addition of numbers in the coming quarters?
Thank you, ma'am. Before I answer your query on the collaboration with Rolls-Royce, let me intimate you and the viewers that our financial results for the quarter ending and 9-month ending 31st December 22 has been very encouraging, and we have been able to maintain the tempo that we set during the first 2 quarters of the current financial year. Our revenue from operations have gone up by nearly 62% from 1,212 crores to 1,960 crores.
So we are aware of your numbers due to paucity of time generally. If you could just concentrate a little bit on the questions which are being asked. Yeah.
Okay, the question asked, I understand, is on the collaboration with Rolls-Royce. Yes, we have been having a healthy business relationship and an existing license agreement with MTU Rolls-Royce for the last 10 years. We have now moved one step further. That is towards localization and indigenization of the marine diesel engines. This is a project now we intend translating into a license agreement within the next 6 months and expected to fetch rich dividends, since both in the Navy and the Coast Guard will be using these marine diesel engines for the projects that they're going to come up with.
Mr.
Now,
Hari.
as regards the... Yeah, please go ahead.
Sir, I wanted to ask you, since you're talking about this collaboration and the opportunity and the dividends that particular deal will get in, can you tell us the size of the opportunity here? Because you did see an increase in your order book. You're sitting on order book of 22,240 crore rupees. That is as in December. Will it start adding to your orders in this quarter itself? What is the outlook going forward from this collaboration, and how much will it add?
Okay, these diesel engines that we are going to build along with MTU are for small and medium-sized warships of the Indian Navy and Coast Guard. Definitely, the returns will not be accrued from this quarter itself because we intend signing the license agreement in the next 6 months, and after that, based on the order book that is received from both the Navy and the Coast Guard, irrespective of which shipyard gets the order, be it GRSC or any other shipyard, the engines that are most likely to go into these ships are going to be from this collaboration. Now, Coast Guard has already come up with an RFP for 14 fast patrol vessels. That is 42 engines. That is the volume that we are expecting from this order. Navy has already come up with an RFI for 21 waterjet FACs. That is 63 engines. So nearly 100 plus engines is what we are looking at in the next 2 to 3 years coming out of this collaboration.
100 plus engines coming out of this collaboration. Commodore Hari, if you could also tell us a couple of things about your own business itself. The third quarter, like you said, revenues were up 44%. It's reported to the exchanges as well. The first 9 months of this year, revenues up 62%. The last time you joined us, you said that your 25 to 27,000 crore worth order book that there is will be completely exhausted by FY27, which means that your revenues by FY27 would be 4 times what they are in the previous fiscal. Can you give us some more sense of your current order book? What are you expecting in terms of inflows coming in? And is there a risk of any delay?
Okay, our current order book, as you mentioned, is 22,242 crores as of 31st December. And we expect to conclude a contract with the Indian Navy for an order for 4 ocean-going patrol vessels, around 3,400. So at the end of the current financial year, our order book is expected to stand at plus 25,000 crores, which is a very healthy order book. As I had mentioned earlier during one of our interactions, that the current projects, excluding the next generation ocean-going patrol vessels, we plan to complete by FY27. So yes, it is a known fact that the order book will be exhausted, and so the revenue accrual will increase in the coming years.
Okay. One of the key things that I wanted to also focus on, sir, was the margins. Can you tell us about what kind of improvement you would probably see in your margins based on what you are envisaging on your order book?
See, as we are a heavy in the engineering, shipbuilding, manufacturing industry, any margin that is a PAT margin above 7.5 is healthy. We have been and we will maintain a profit margin of plus 8% in the coming years. That is the assurance that I intend providing to the viewers and you.
Your margins on a consolidated basis for 9 months was at 6.5%. So what might you be tracking for Q4 and this 8% guidance? Are you providing that guidance for FY24?
See, as of the 9 months that ended 31st December, our PAT margin stands at 8.26. For the quarter that ended 31st March, it is 8.53. Definitely, we'll be maintaining a margin plus 8 in the coming years.
This is what you're talking about, the PAT margin. Yes, this is what you're talking about, the PAT margin. What my colleague meant to ask is about the EBITDA margin, because that fell on a YOY basis, and you said it is because of orders coming via competitive bidding is the reason why margins fell. That's what you said in the analyst meet, right? So can you tell us whether this trend will continue, these competitive bidding processes, and that is something which will continue to keep your margin under pressure, or will it see improvement?
See, competitive bidding is the order of the day. The era of nomination is over. Competitive bidding is the order of the day, and we have won orders on competitive bidding at wafer-thin margins. How we are maintaining this EBITDA margin plus 10%, 12% is our 12.55% is our 9-month margin, and how the PAT margins are being maintained is purely through rationalization and of our revenue expenditure and through process improvement. Yes, despite the competition that is remaining and that will continue in future also, we will be able to provide similar margins.
Just finally, before we let you go, ship repair, you said, will increase from what, about 10% of your revenues to 30% of your revenues. Just wanted to know by when that happens, and is ship repair a lot more margin accretive than other parts of your business?
Yes, ship repairs, Mr. Mangalam, the margins are high, actually much higher than what is there in shipbuilding. And as I had mentioned earlier, we started shipbuilding just about a year and a half back. And we already started seeing the results, of course, in a modest way, with from our facility that we have taken over from the Kolkata Port Trust. To answer your question as to when we will reach that 8 to 10 percentage of our overall revenue, 3 to 5 years. That is the target we have kept internally.
Okay. All right, sir. Thank you so much for joining us today. That's the word coming in from Garden Reach Shipbuilders. The stock is higher by 3%, and they do have some orders coming in which will increase the order book, and they plan to increase their revenues as well on the back of higher opportunity coming in from defense. With that, we'll slip into a short break now. On the other side, Vishal Manchanda of Systematics Group will join in for a discussion on the pharma sector and a couple of stocks which are in focus.
Welcome back. Well, let's discuss the pharmaceutical space. Like we mentioned just some time ago, Cipla is at a fresh 52-week low. There is concerns about their Indore facility and key drugs such as Advair generic hitting the market. To talk more about it, we have Vishal Manchanda, who's the pharma analyst at Systematics Group, joining in to discuss this. Vishal, hi, welcome to the show. Cipla is at a fresh 52-week low. According to you, what is the severity of those 8 observations which has been issued to the Indore facility?
Correct. So these observations were pretty kind of not what we have seen in the past. So these observations are much more serious in nature. So there are observations that point to sterility not being assured because there were media validation related issues. Media fill validation related issues. Apart from that, the more important observation was customer complaints. There were kind of disproportionate customer complaints seen for a product, and these were not adequate. These were not kind of investigated into as they need to be. So these, I think, are the 2 primary observations. So I think sterility and customer complaints, these are 2 areas which pose which I think are very serious in nature, and hence a warning letter is probably kind of a likely outcome here, or an OAI status is a likely outcome. So that should actually lead to approvals.
So Vishal, what kind of approvals were pending from this particular plant? If you're expecting a warning letter, of course, those approvals won't come through. What were the big approvals that Cipla was expecting here?
So I think apart from Advair, which probably is from this plant, they should also have other respiratory filings from the plant. Based on what we understand, among the respiratory filings that Cipla has, one is a product called QR, and another is Flovent. So put together, these 2 products would be about $300 million in annual sales in the US. However, we have not been forecasting sales from the other 2 opportunities, Flovent and QR, but we were estimating contribution from Advair, which should not come through.
Right.
Having said that, I think the stock price has corrected quite steeply. Probably it's corrected more than what it needs to account for the delay in approval.
Right. I think you anticipated my question. I just wanted to know, with the correction that we saw about 12% this month itself, in rather the last 1 month, how much of that is priced in? What kind of changes have you made to your estimates on Advair and all the other drugs that you spoke about in specific?
So I'm yet to put out a change in estimates, but we have currently been modeling around $75 million in sales from generic Advair in FY25. So that potentially is at risk now. But but it might get delayed, but it should certainly come through. So once this plant is sorted out, and generic adware as an opportunity will not decline in size. It should remain as important even 1 year going forward.
Okay.
1 year or 2 years going forward. So I think the opportunity would remain relevant. Only thing is Cipla needs to kind of get this plant sorted out.
Okay, all right. So the opportunity would still remain relevant for Advair generic. But what is your thought on the larger picture that you're seeing for Cipla, considering that the Goa facility and now possibly the Indore facility would be under the regulatory scanner?
Yeah, so I think we never anticipated such kind of issues coming out of a Cipla facility because they have pretty much been clean, except for the Goa facility, wherein they have been again facing issues. So probably I don't know why we are getting to see these compliance issues coming in again. We were kind of better off some time back, wherein these issues were not really a concern. But I think probably there is some, I would say there is some senior management not being able to give the proper oversight in these facilities. So probably the local manufacturing plants are
Right.
not fully taking care of compliance as they need to.
Okay, so that is something which is important to track, the US FDA actions and what is done at the ground level to ensure there is compliance as well. Dr. Reddy's, Vishal, I wanted to check on that because they did make an acquisition. What do you make of this one? What kind of portfolio addition will they see here? What is the opportunity?
So if I look at the acquisition, they bought out about $110 million in annual sales for $90 million. However, this $110 million sales has been declining. So if I look at the latest number for the portfolio that they acquired has declined. So they reported, Main Pharma reported their second half financials day before yesterday, and that reflected a decline in the base portfolio that Dr. Reddy has acquired. But I think even after, if I incorporate the impact of decline and also look at the pipeline assets that they get, so not pipeline assets, but some assets that they have approval for, but yet to reflect in the sales number. Like one of them is generic URA. So all put together, I think they would probably be able to recover what they have paid for in the next 3 to 4 years. So overall, an attractive acquisition, and it's better to acquire assets in the US when everything is in distress, and this probably is the right time to boost up one's portfolio. And I would also believe the acquisition price would be below the net replacement value. So what Dr. Reddy's would have had to spend in terms of creating this portfolio, they would have spent much lower in buying these assets out. So
Okay, if you had
my
to
sense is it's a
Vishal, if you just had to quickly leave us with a one-word answer with the target price of your top pick within the pharmaceutical and healthcare space now?
So Sun Pharma remains our top pick, wherein we think there's a structural. Sorry.
Okay, all right, Vishal, we're going to leave it on that note, but thanks very much for joining in and giving us your perspective on stocks which have been in focus, which is Cipla and Dr. Reddy's in the past couple of trading sessions. Sun Pharma continues to be their top pick within the pharma space. Time for a break now. Aditya Agarwal will join in to talk about technicals. Stay tuned.
Welcome back. Let's talk about all the things F&O this afternoon. It is the frontline indices which are being supported by two important legs of the market, which is one, the Nifty Bank as well as the Nifty IT. As a result of which, there are triple-digit gains on the Nifty. We're mildly off the highs of the day, but nothing really to worry. The Nifty Bank has gained almost 1,000 points from Monday's low, and the Monday's low coincided with a 10% correction from the top, and that is a level that usually finds some support, from which we've seen a bit of a gain. And when the Nifty Bank gains, the Nifty PSU banks actually run harder. Remember, it is also the month where we see a lot of NAV propping of portfolios, and in the last fiscal, it has been the PSU banks which have been doing extremely well. So maybe it is understandable that some purchase would be in that as well. With the up move that we are seeing today, not surprising that there has been a fair amount of short covering. The 17,300 call comes up for you. We had seen a fair amount of call writing in yesterday's trading session. So those writers haven't got follow through. In fact, they've been caught on the wrong side. So 20 lakh shares shaved off the 17,300 call. 17,350 call writers as well are facing the heat, and they've covered almost 8.5 lakh of their open positions as well. While the call writers have been covering their positions, the put writers have been active, and they see a fair amount of support at lower levels of the Nifty 17,380, where the 200-day moving averages appears as the next important support before looking at 17,255, which was the Monday low. So 17,400 put writers extremely active for a premium of 53 rupees, and 17,350 put writers also active, coinciding with those support levels. The Nifty put call ratio, which was 0.68 at close yesterday, indicated that it was oversold, so there was a bounce which was in the offing. The bounce has come by. The Nifty put call ratio has now moved to 0.9. So let's see where that goes from here as well, especially ahead of the weekly options expiry tomorrow. How does all of this tie in with the charts? We have Aditya Agarwala of Invest for Edu joining us with his levels and individual stocks. Aditya.
Hi Mangalam, thanks for the show. Good afternoon. Clearly there is a bit of a short covering, as you mentioned at the start of the show, and it was calling for. We had seen a significant correction in the past few trading sessions. Markets were trading at oversold levels. So this short covering rally was due. I believe there is more room on the upside in the short covering rally. It can stretch all the way to 17,500 on the upside, where the next line of resistances lie. So on the downside, as you mentioned, 200 DMA might as in support. So 17,350 would be a good support area for the market now. And on the upside, Nifty can test levels of 17,500. Having said that, I don't think we are still out of the woods. The volatility will remain high in the markets. Bank Nifty is something which has been outperforming, and I believe there is something which will continue to outperform Bank Nifty, especially the PSU space, as you mentioned. And on the upside, 40,800 is something I'm eyeing on the Bank Nifty. Once it sustains above 40,650, there are high likelihood that Bank Nifty would also test 40,800 on the upside. So keep an eye on Nifty and Bank Nifty, both. The short covering rally, which is resumed in trade today, might have more legs in the coming trading sessions as well.
Okay, Aditya, what would your individual technical picks be in that case?
I've got a couple of buy recommendations, Sonal. One from the banking space, obviously, because Bank Nifty has been buzzing around. So Axis Bank is something which is looking very attractive at current levels. After a correction, it took support at the previous breakout level, and now it is on its uptrend again. So on the upside, can test levels of 900. One should initiate fresh longs in Axis Bank with a stop loss of 840 on the downside. A second stock is Radico Khaitan. Stock has been an outperformer and has bucked the market trend, continuously making higher lows. So on the upside, stock can test levels of 1230. One should initiate a fresh long positions in Radico Khaitan with a stop loss at 1160 on the downside.
Okay, all right, Aditya, we're going to leave it on that note. Thanks very much for joining in and giving us your picks. Need to take a short break, but more on the markets, a lot of stocks in focus. More on that once we're back. Stay tuned.
Welcome back. Well, let's study for the markets. We are looking at Nifty sitting with gains of 113 points. Mid caps are the ones which are outperforming, with advance decline ratio absolutely in favor of the advances. While energy stocks, they are doing really well in trade today. So we have something like an ONGC which is higher in trade. It is at the day's high as we speak. NTPC is the other one which is also higher by 1.2%. So looking good for some of these energy names which are in focus. The other one that I'm watching out for is IOC. So the stock is higher in trade today. Remember that big LPG hike that has come about. Not big of an impact as far as the stock perspective is concerned, but nevertheless, that stock is in the green right now. The other one we have is Tata Power. That too has surged to the day's high, up 1.5%. So looking good for some of these power and energy stocks which are in focus. The other pack of stocks which are in focus is the February auto sales. The numbers for Bajaj Auto were lower than estimates at 2.8 lakh units, and it witnessed a steep fall in exports as well. Earlier today, we spoke to Rakesh Sharma, who is the executive director at Bajaj Auto, to decode their Feb sales figures. Listen into what he had to say.
Yeah, I read that report, which I thought was pretty perfunctory, and we did not understand where those numbers were coming from and what was assumed. And if I compare, not just sequentially, but if I compare how March will probably look compared to last March, we will be around the same ballpark. So there is nothing so dramatic as that report suggested about, massive cuts. The exports has been under pressure, particularly Nigeria, which is a very large market, is the largest overseas market for us. Fundamental issue, as we have been saying, is actually, if I keep Nigeria aside, is actually the availability of the dollar now. In most countries, our stock covers are quite thin. Demand is lower than what it was last year, but it has improved. However, there is not enough foreign exchange for international trading.
Right, so that's some commentary coming in from Bajaj Auto. Just keep an eye out on a couple of stocks doing extremely well. GNFC from the broader markets has surged to the high point of trade. Hindustan Aeronautics gives it company. We've heard about the prospects in the defense space by Garden Reach shipbuilders, but that's about water. On air as well, we are doing well. Seems like Hindustan Aeronautics is taken off about 5.5% from the lows. Take a short break, come back. We shift focus away from equities and speak about commodities. Manisha Gupta joins in.
Welcome back, and joining us on the show now is Peter McGuire of XM Australia. Peter, hi, good to have you, and what a good day, because we're looking at a good gain up in natural gas, up 5%. Crude is trading in the positive, and the base metal prices clearly have come back quite strong after that complete sell-off that we saw in the month of Feb. So not just that the dollar index has come off its highs, but the Chinese PMI numbers have been on the positive side as well. How are you reading the numbers, and do you think that the gain that we have seen in the metal prices today can hold on?
Well, good afternoon, Manisha. Yeah, I think those PMI numbers first off out of China were very, very positive, and that's been demonstrated by the market in Hong Kong, which is just, boom, it's 4.5% up. So we had a nice move to the upside as far as copper, as you mentioned, and so that was up the best part of nearly 2% overnight. So, yeah, it's been a strong rally, nice way to start March. Energy prices, as you mentioned, are up, crude's up, and dollars come under a bit of pressure, sitting at around about 104.60. So I won't be surprised. It's a race, Manisha, between euro and dollar, where we go as far as rates and who's going to be the last man standing.
Oh, well, yes. Among the overall metal pack, where do you see better fundamentals? Because at this point in time, after that run-up that we saw in Jan and the uneven recovery that we saw in China in the month of Feb is what led to the profit-taking. But with at least a couple of Chinese numbers coming in on the positive side, what metals do you think are more favorable than the others?
Well, I think I've got to keep an eye on copper, Manisha. I mean, and nickel, but certainly copper is a benchmark, and that gives me a barometer to look at, and it'll lift all boats. So we just got to see iron ore, of course, but I'm really keeping an eye on those big themes and where we move forward as far as consumption. We're worried about, growth globally. Economists are certainly concerned as far as, weaker growth from an export side, but we'll just have to wait and see, Manisha. I think it could be a nice run-up over the next, lead into Easter.
So as of now, while there are gains and the dollar index has come off, but markets really seem to be preparing for a 25 to 50 basis point of a rate hike come the next month. And would that change from where we are trading right now?
Well, it could do. I mean, I'm certainly conscious as far as President Lagarde and where Jay Powell play. And, it's very choppy. We've seen a big move since September for the strength of that euro. And I'm just thinking maybe, you could see that it oscillate, that US dollar index. It was only 105.50 going back to Friday, and here we are at 104.50. So it's given up a bit of steam, and I think it'll continue to be choppy. And though traders like that, Manisha, we like to see movement.
Well, absolutely. But, after the kind of decline that we've seen for Feb, how would you look at March? How do you see the current month ending?
Well, I hope that it's going to be a nice move northwards. I mean, I worry a little bit about energy prices if they're going to continue an uplift from an inflation side, but producers want higher prices. Currencies will remain choppy because we've got so many different, central banks taking action. And as far as commodities, I like that number coming out of the PMIs for China. So I think base metals will have a lift from here. So let's just hold on to our hats and take it day by day, Manisha.
Silver is another one, which is a part industrial metal, and we've seen 12.5% of decline for the month of Feb. Any hopes here?
Well, you might do. I mean, they're all pretty choppy, and that's a big washout. So you might see a little bit of a reversal. It's hard to put your hand on heart and see where you're going to see, opportunity to buy in. But there's always, gold's moving up, 1842. Silver's back up. These sort of markets, I think there's plenty of upside left. So, yeah, don't rule them out yet.
All right. Thanks a lot, Manisha and Peter, for joining in and giving us all those details. We will take your leave on this edition of Halftime Report. On that note, stay tuned.
स्मिता आओ